Did you know that the global electric vehicle market is experiencing some fascinating shifts this year? While EV adoption continues to grow around the world, the pace of this growth is beginning to change in notable ways. According to the latest data, global EV sales in August 2025 grew by 15% compared to the same month last year. However, this growth rate is slower than the 27% year-over-year increase recorded from January to July. The change is particularly evident in China, the biggest EV market in the world, where sales growth in August slowed to just 6%. These dynamics hint at a complex interplay of trends shaping the EV market, and there's a lot to unpack. So, let's dive in and understand everything in detail. China has long been the powerhouse of the EV revolution, but August's modest sales increase of 6% is a stark contrast to the explosive growth the country witnessed previously. This cooling off is largely attributed to the timing of the Chinese trade-in scheme introduced last year, which saw EV sales soar. Under this scheme, generous subsidies encouraged consumers to trade in old vehicles for new electrified models, creating a surge in demand. However, as those incentives taper off, the market seems to be stabilizing at a slower growth pace. Despite this shift, China still contributed significantly to the 1.7 million global EV units sold in August, which included approximately 1.16 million battery electric vehicles and 570,000 plug-in hybrid electric vehicles. Europe is another important piece of the puzzle. The region continues to see strong EV sales underpinned by stringent emissions legislation, particularly in countries like Germany and the UK. These policies not only encourage consumers to go electric, but also push automakers to prioritize greener technologies. Year-to-date, European EV sales have surged by an impressive 31%, outpacing China's 25% growth in the same period. This demonstrates Europe's rising influence in the EV market as governments and manufacturers work together to meet ambitious climate goals. At the same time, this growth also highlights the region's resilience, even as other key markets like China face challenges. Switching gears to the United States, EV sales have been skyrocketing thanks to a unique factor: the upcoming expiration of key tax credits. August turned out to be a record-breaking month for the US, with over 175,000 EVs sold. The rush to purchase EVs before the tax credits expire in September created a boost in demand. Under the Inflation Reduction Act's provisions, the 30D purchase credit and the 45W leasing credit, both valued at up to $7,500 for eligible EVs, are about to end. This led to a last-minute surge, as consumers hurried to take advantage of the financial incentives before they disappeared. North American EV sales grew by 6% from January to August, marking steady progress. However, uncertainty looms over how steep the sales drop will be in the fourth quarter once these credits are no longer in play. Uncertainty surrounding the US market has already prompted automakers to make adjustments. Volkswagen, for example, announced plans to scale back production of its ID.4 electric SUV in the US starting in October. Similarly, General Motors is cutting production at several EV-focused facilities, as the industry anticipates a potential slowdown. These decisions highlight how external factors, such as government policies and tax incentives, can significantly influence market dynamics and production strategies. Globally, the EV market grew by 25% between January and August this year. Despite the challenges, that's still a remarkable achievement for an industry undergoing rapid transformation. China and Europe largely drove this growth, with America contributing more modestly but still making notable progress. What makes this growth all the more exciting is its reflection of a broad shift in consumer preferences toward more sustainable forms of transportation. Governments, manufacturers, and consumers around the world are increasingly recognizing the need for cleaner, greener technologies that reduce carbon emissions and combat climate change. Now, as we move forward, it's worth considering the uncertainties that lie ahead. For instance, in the United States, the end of tax incentives may create a significant dip in EV sales in the coming months. Analysts like Will Roberts, automotive research lead at RoMotion, express concerns about how pronounced this sales drop might be. The industry is particularly worried about how this will impact both short-term profits and long-term progress toward electrification goals. China, too, faces its own set of questions. While its EV market remains the largest in the world, sustaining momentum without substantial government subsidies will be a challenge. With the trade-in scheme no longer driving buyers en masse, automakers may look to innovate or cut costs further to maintain their competitive edge. Simultaneously, European markets, bolstered by robust emissions legislation and rising consumer interest in sustainability, appear to be on stronger footing, but even here, challenges such as raw material shortages, supply chain disruptions, and competition among automakers could pose hurdles. The global EV market is a story of tremendous progress balanced by complex challenges. On one hand, rising sales figures underscore the growing appeal of electric vehicles as a cleaner alternative to traditional internal combustion engines. On the other hand, fluctuating growth rates in key markets like China and the US show how external factors, policies, incentives, and economic conditions can dramatically shape outcomes. For automakers, navigating this landscape requires not just innovation but also adaptability to shifting regulatory and market conditions. We stand at an exciting juncture for the EV industry, where global trends are converging to reshape transportation as we know it. Whether it's squeezing the most out of government policies, responding to consumer demands, or rethinking production strategies, automakers are under pressure to keep the momentum going. At the same time, consumers are learning more about the benefits of EVs, from their lower emissions to potential cost savings over time. These factors will continue to fuel interest in EVs even as markets face ups and downs. The EV revolution is undeniably underway, but it's clear that it won't be a straight road. The next few months will be crucial in determining how markets respond to policy changes, slowing growth in key regions, and new challenges in manufacturing. As an increasingly global industry, the successes and setbacks of one region will ripple out to others, making it all the more important for stakeholders to remain dynamic. Whether you're an industry observer, policymaker, or potential EV owner, these are exciting times to keep watching the road ahead. Leave a like if you enjoyed the video, and don't forget to subscribe to show us some support. Thanks for watching.